Happy Tuesday, everyone. Welcome to the Metal Markets. I'm your host, Mark Stalker D. Tape bombs continue. So we have had some news hit the wires. We had senior Iranian source, Tehran has rejected any temporary ceasefire with the US. So how do we read that? It could be that they want the actual end of war rather than just a ceasefire. So they want to work out something that will end everything immediately. So it doesn't have to be like a negative thing. I'm going to spend some time observing these levels that we have. Initially, I had an idea of longing crude oil from about 112. Now that's already happened, so now I have to fall back to some of my other hypos. So while we wait for things to settle down, let's have a look at the levels on copper, gold, maybe even silver, and crude oil, because everything is down to what crude oil is doing these days. And before we begin, let's just get some housekeeping done. So please read the risk disclaimer. Do not blindly copy anything that you see on here. This is not financial advice. This is just an overview of interesting levels where we expect the dealers to engage. Who are the dealers? They are the wizards who have a lot of cash flow that provides both the liquidity for the rest of us and also makes a lot of cash for them, right? Victor is asking what happened. Iran has rejected US proposals for ceasefire. Let's see what they meant by that. I'm kind of reading something different into that. I'm not reading it as like, hey, yes, we want to keep fighting. I'm reading it as we want the war to definitively end. That's how, again, doesn't have to be true, but, you know, it doesn't have to be, you know, a negative thing. Now, obviously, Equities reacted by smashing down, very quickly bounced up, but then they're dripping lower again. And consequently, crude oil reacted by going way back up to VWAP. This is Globex VWAP, this purple line. So what do we have now? We have gold that has been a little bit interesting to me because the volatility in gold seems to be settling down, even though we have so many things happening, but it's no longer super crazy. Having said that, the ranges that has been established have been pretty wide still. So I'm going to continue with my plan of low size and wide stops for more ticks, right? These kind of markets are actually what I probably enjoy more than trying to squeeze out like 70 ticks or something out of a market that is not moving much. So, you know, small size, wider ranges, wider stops, obviously. And then just trying to position ourselves, or myself, in light of whatever levels we have. Okay, so let's have a look at gold. To me, today, this kind of looks like copy-paste of yesterday. We had a very similar thing. Tokyo high today is located just under this mega call wall at 4,700. I must say nothing much has changed in the options on gold. They're still pretty much the same ones that we had yesterday. So 4,700 as a major level. Around about these prices, we have 4,650 to the downside, which unsurprisingly is where Tokyo is located. You can kind of see the function of the dealer activity. To the upside, if we happen to go into some massive uptrend, we do have 4750, and 4750, if you look at the end of day on mental Q, is also a gamma wall from the end of day options, but I like to use like intraday snapshots as well. So yeah, it's an interesting development, but same kind of thing where it went above the Tokyo high, tried to stay above 4,700, ultimately failing that, but then also becoming like really spiky with a lot of wicks either side. we're going to see what happens into the COMEX Open, but I wouldn't be surprised if they remain in this newly found range between 47.22 and then maybe this VWAP around 46.80, let's say, and then maybe further in the day they make another decision. So that is definitely one option. But as it stands right now, the acceptance or return into the Asia range is very iffy. It's not confident. It is basically just touching it and then kind of bouncing around it. So we could see some pinning around the 4700 area. That's going to get uncomfortable because those ranges are never easy to trade. But if you define an early range in such a way that you have something to scalp around, there could be an idea that you basically scalp longs from VWAP and maybe shorts from just above 4,700 somewhere. So, you know, we'll see what they do here. And of course, the other option is that they continue whatever they started. So going above Tokyo high, going above 4,700, and then creeping back up to yesterday's high. That is much closer to this moderate call wall, so we're still sat at about 47.34, let's say, rounding things up. To the opposite side, if we continue to rotate through the Asia range, I do see VWAP as a potential pain point where they may have trouble going further down. But again, if we have some good news, right, that could be just not on the cards at all, because everything is now correlating to crude oil and is correlating a massive amount of assets across the board to whatever crude oil is doing. So whenever I'm like looking at anything in the past 2 weeks, what I'm seeing is a mirror image of crude oil. So if you don't know how crude oil moves, this will probably pose quite a bit of a challenge for trading, because crude oil is a double-edged sword, and this is not new. We've had a bit of a slowdown in crude oil over the last sort of 18 months or so, but now it's definitely back with a vengeance, and crude oil is kind of tricky, and you know, equity traders don't really enjoy trading crude oil because of this activity that it likes to do. But yeah, so not much change in the options chain at all. When it comes to the average ranges, they're all pretty far out. And right now, they're not really going to do much for us. I can tell you that the average range for London, that's the average session range, is sitting down at 46.28. And then to the upside, we have the average session range high just above the 47.50 level. So that could be something to fall back on if price ever reaches it. However, we have some bigger levels in and around these levels that we're seeing now. So that's gold. Let's move on to copper. Copper had an extraordinarily small Tokyo range. Very, very small. So very compressed. When it comes to small Asia ranges, I typically tend to take them more as breakout points, because the smaller the range, the easier it is to break out of it. And with that in mind, I would probably look at what gold is doing with its own Asia range and then take the clues from there. So if Asia in gold starts to give like a good pullback, then we may jump on something here on copper as well. Now, this time of day has a very big habit of doing mean reversions that typically last straight into COMEX Open. So that could be one thing to consider. Out of the bigger options levels, I don't really have too much right here. If I look at the end of day, there are some minor levels at 558, 556, 555, but nothing really that would tell me, hey, this is a high probability long. So I'm probably going to have to wait until some sort of a reversal that could act more as a beacon to enter any kind of trades. Yesterday, 560 was an interesting level, but today that is not really showing up as a massive area. The only thing I might say is that because the entirety of the Asia range was kind of bouncing from that 560 range, maybe that's an interesting thing. So for now, it's all just like small scalps with not a lot of profit margin. So we have maybe 87 ticks of range for Asia. So that would mean if I enter something, my initial profit margin cannot be bigger than that. But obviously you have to account for the fact that the entry is probably not going to be perfect. I'm not, looking to grab all of that. So yeah, that puts me onto like more kind of a scalpy side. So maybe getting 1.3 R because I'm using 55 tick stops on copper still. And maybe 1.5 if we get like a really good entry. So yeah, well maybe we do a long on copper at some point. We'll see. DJ Runs says, correct, not enjoying this everything is crude business. Crude is rude. Crude is rude. Oh yes. Kenny is saying, good morning Dee, good luck with your new medication, hope it works out for you. Fingers crossed it's working out so far. So the way that's happening is that in the morning I do wake up with symptoms, but then as soon as I take the medication, after about 2-3 hours, I start feeling a lot better and I start feeling normal. I don't have weakness in my legs, which is like a complete godsend. So, touch wood, we'll see, but very, very promising. All right, let's have a look at some more chat. Eloisa is here as well. Good morning, good morning. Very good to see you. God, you're up early. V79X saying, not touching gold again today. Yeah, it's tricky because, gold even now, what is the average range in gold? Let's have a look. I mean, average range for London, 924 ticks. New York, not too far from there, 1065. And for the entirety of the day, we have 1552 ticks. That's crazy, right? And that means that even your 1 micro is probably not going to do very well unless you're using 300 to 400 tick stops to allow you to capture some bigger movement. Anything smaller, you can expect to hold a trade for like 10 seconds and then that's it, just because of the big wicks that we're seeing and a lot of whippiness. So yeah. All right, so I'm just going to chat here. Visionary saying crude better be treating you good or I'm gonna get it. Yeah, to be honest, crude and me had a bit of a tricky relationship because it died. Like for nearly 2 years, it was like such a dead product, and I'm hoping that we never get back there. So yeah, we'll see. For 10 years, I traded it with 300, 350s, 500 ticks range, and then it goes dead on us. So now it's back. Again, I've said it before, not happy for the reasons why it came back, but I'm glad to have my main product in the mix. On the flip side, that meant that I had to dive deeper into the statistics of precious metals and base metals. So, it's all an opportunity to just kind of get better and learn more about more markets. And that never really stops. And if you think that you'll get to, someday where you don't learn anything, oh, trust me, you will still be learning a lot of stuff. After doing this for 20 years, I still get days where I'm like, okay, that's new. Joe says, good morning, D. If 560 level is broken, would you consider shorting? Not at this time of day. Not at this time of day, because this time of day tends to be like a neutral day gold mine. This is very different from, I suppose it's not that different from post and white cut, Joe, because you know what that is. But London tends to, especially for this time of day, it tends to give bigger mean reversions that then continue into COMEX initial balance. So sometimes if we don't have any massive releases, I will kick off a trade in and around this time and then hold it. The only time I don't hold it is if it's a continuation. So continuations versus mean reversions are pretty much 50-50. It's a coin flip. However, the mean reversions tend to have a bit more excursion in them, which is just a fancy way of saying bigger swing in the opposite direction than the continuation. So, you know, am I expecting the test of 550 level? Probably not, unless something crazy happens. You know, maybe if we get like an end of war sort of deal where, you know, everybody agrees and they're all like, yeah, okay, we're stopping everything. Maybe that could be something to consider, but I don't think there's still cause for it. So any sort of a dip below the 560s at the moment, I'm just seeing it as a wick of Tokyo low and an opportunity to get in on something. And in fact, I'm going to switch this to the copper side of things, and we're going to start the day. Let's just do a 2 micros trade just to kind of begin the Tuesday, because I didn't trade Asia. I actually slept pretty well and I wanted to sleep. So yeah. Let's see. This guy says, good morning, Dee. Did your copper trade from yesterday play out? I grabbed all of 14 ticks out of it, so yes and no. It didn't do what I wanted it to do, even though we had some news towards the end of the day, but it didn't really move much. So grabbed 14 ticks and that was it. I did manage to get in on a little short RBOB super late in the day, and this is exactly because everything is now correlating together. So just like crude oil is dragging everything else, likewise the MOC now for equities has a knock-on effect in crude oil. So I played on that we were reaching some supplies, and RBOB kind of seemed in a good space, so did grab a little bit of cash there. And RBOB is so volatile now. I only prefer to trade it after everything is closed, and then you kind of get a bit of a shakeout that is more directional than the rest of the day. And I've been staying away from RBOB and heating oil during the regular trading hours, and then once everything settles, it becomes a little bit more tradable for me. All right, gold is hitting VWAP at the moment. Let me just see whether we have some kind of news here, because things are still moving. I'm guessing people are talking. Let's see. EU calls for maximum restraint in Iran. What does that mean? Japan says enough crude oil and all products have been secured for Japan. Happy for that. EU to hold new meetings of its oil and gas coordination groups this meeting. Is that right? Who writes these things? It's like EU to hold new meetings of its oil and gas coordination groups this meeting. This morning? This morning? Maybe? Yeah. Iran's Revolutionary Guard warns neighboring countries restraint is over, will target US and partners' infrastructure, and threatens to disrupt regional oil and gas supplies for years. Oh God, man, this is no good stuff, guys. What are we doing? Are we destroying planet Earth, finally? Is this going to be it? Is this the reason for the Fermi paradox? Because nations tend to destroy. Are we going to have a Mad Max situation? Should I nip out and get leather pauldrons and a machete? Is it time? I don't know. We'll see. Not good news here. But not good news at all. Okay. So that thing that we heard prior, that was actually a pretty malicious statement. Yeah. I've been through 3 wars so far. Not really looking forward to a 4th one, if I'm going to be honest. The positive correlation between metals and CL is annoying because cannot really trade both at the same time. Yeah, that is the danger of risk-off sentiment, right? So whenever you have risk-off, it means that everything has a correlation, and that's where something that maybe many of you who have only been trading NQ or only been trading GC, you have not considered, because you want to look at other markets, but most of the major assets, they're all correlating with one another. Perhaps this is the time to have a look at completely alternative markets. We have 35 products, 36 products that we can trade with Topstep. There's ags, soybeans, there's lean hogs, there's live cattle, there's corn, you know. So maybe, just maybe, putting it out there, maybe this will be the time for us to have a look at something else. Now, lean hogs still run, and live cattle, they still run on old pit hours, so they don't run overnight. And that's going to be a little bit different. But hey, if everything else is correlating and you're having a bad time trying to trade this nonsense over the war potentially kicking off, this would be the time to use this to learn something else, right? To learn alternative products. I'm probably going to be looking at some live cattle, maybe even lean hogs. That's an interesting market for me. We have cows out the back, so they're not mine, they're the farm next door. All right, so gold is potentially trying to bounce here. Let's have a look at some tape developments. All right, so cumulative delta is shaving off a little. Just a little bit though. And so far, copper is still not entirely reactive. The relationship between copper and gold is sort of like gold does something, and then there's almost like a bit of a delay before copper reacts, and that's because the correlation is not a factor of 1. It is more like 0.3, 0.5, and it has that slight late to the party feel to it, but that's actually pretty good because you can, or I can use gold developments to maybe see whether there is something I can use to position myself in copper, like a little crystal ball into the mini future, right? It's like 5 seconds ahead. My star says we'll be trading in pit of stones next year, bartering meat and corn, or bottle caps if you watched Fallout. Fallout, yeah. NQ made me feel like I had no idea what I was doing yesterday. Rain Moon Doe says that's why, because it's doing what crude oil is doing. It's not normal stuff. And you know, people say, oh, you know, you have to be in and out, in and out. I actually disagree with that, because what I'm seeing is that the same setups with extended targets are transpiring at exactly the same times of day. But the problem is that you know, double-sided nature and high volatility, and people are just not used to it, because, you know, traditionally equities are pretty directional. So once you kind of catch, you know, either a rally or a sell-off, it tends to be more predictable. But no, what does crude oil do? Overnight it goes massively, 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 and then it just fakes everybody out, jumps off a cliff, and then bounces back. You know, that's crude oil for you. And that's why, you know, we all say size down, forget that the large CL contract exists. Because honestly, unless you are super experienced in crude oil, I mean, even I'm not touching it right now, because I'm just like, F no, right? Why? Because it's too much risk, especially on prop accounts, especially on accounts where you have pretty strict risk parameters. You know, even if you have a good account balance, and even if you have a slightly expanded risk in the live, you still only have $5,000 a day, maybe $6,000 if you've done exceptionally well. Those $6,000 in this volatility on main crude oil contract, it will go in like a blink of an eye. It is nothing. You would probably need to think in terms of maybe 15 to 20K daily loss limit, and then grapple with the main contract. So just keep in mind that if you are playing either main GC or main CL or main NQ, you are literally asking for a blowout. Literally, and I don't mean hair. I mean actual kaboom account, right? No account, no XFAs, no nothing. So it's your money at the end of the day, do what you like. But I'm just giving you, an overview of like what's sensible to do. And I'm sorry, but it's just not sensible to trade these types of markets, headline risk, everything slaved to whatever crude oil is doing. The markets waiting on every single piece of news to move and then moving at a speed of light without you being able to react. So you saw me yesterday on group coaching. I tried to catch the reversal earlier. Why? Because I knew that once it started, I wouldn't be able to catch it, right? So I kind of do these punts where I'm like, let's just position myself with like $200-300 risk and just leave it. Use a 4-hour time frame, use a good options level somewhere there, and then just see if I can get a swing from there. Because what tends to happen with headline risk is that they will still need to reach the high liquidity pools that are not on a 5-minute chart, they're not on a 30-minute chart, they are properly on like a bigger time frame, and I prefer 4-hour charts for that. But at the same time, the 4-hour chart you can't trade on like 50 ticks or 20 ticks, especially not on something that is moving over 1,500 ticks a day, right? So yeah, I like these markets, but I can understand why people are struggling. However, I'm like a kid in a candy store where I don't have to wait too long for my movement, and once I've positioned myself, I am perfectly fine sitting in some drawdown in a zone and even getting stopped out if I'm like playing out wrong. However, if I am right, which I tend to be about 50% of the time on such trades, the reward is like massive. So I get this huge swing where I'm able to get like 3, 4, 5 R. So, but I have a very specific way of looking at the markets. Not everybody can do that. Azero's model can be used for OT entries. Can you elaborate? Because I don't think many people know what that is. Someone saying Moave? Sorry if I'm butchering your name there. Morning D, hope you're feeling better. Do you see 111 to 112.50 as a good support and buying range? So here's what we have on crude oil. You can see there are two sort of interesting put levels there. So the way I'm reading this is that there is a lot of put protection underneath 111, but really I wouldn't be surprised if we're just, and then a ton of things at 115, 115.50, 116, 116.50, 117. So if we ever get up to over 115 level, I would expect to see some sort of a range between that sort of 117 and 115 level. It's never a smooth thing when you have like bunched up levels so close together. Usually there's a bit of space and then you have a very obvious GEX level. That's not the case in crude oil today. So they're waiting to see what people are going to say and how this conflict is actually playing out. And on the bottom range, you have a wedged area in the same way between 111 and 112. So that's kind of two extremes that we're working with. And that's why I don't want to get involved in the middle of that. Obviously that could change throughout the day. Like, let's say that we wick up to 115, then sell off. I might want to run a short at that point if there's causes for a short and the news is not kicking off in the opposite direction. Of course, the safer thing, is there such a thing as a safer trade at all, like in general, even when we don't have headline risk? But yeah, so I wouldn't be surprised if NYMEX makes a new high on the day. So that's one thing. But yeah, 112, it was my initial idea. But again, I didn't want to trade before I came onto the stream, and I'm trying to get a little bit more sleep and, less time on the charts, because that was also kind of killing me a little bit. But yeah, let's see what they do in and around 115, maybe even higher than that. If we are firmly above 115, I wouldn't be surprised to see some sort of a range getting established between the $2 mark of 117 and 115. Anything in the middle is highly sketchy, because even if you have a look at how the market is behaving, this is just middle of nowhere, right? So we either go higher towards that recent reversal on the larger time frame. So let's just scan through things here so we can get a better context. Takes a while to load up a 4-hour time frame. TP Hit says trading is doing, not talking. I actually disagree with that. I think trading is waiting. Trading is waiting mostly. If you're just sitting there clicking buttons, I would, like, unless you're a market maker with, you know, very deep pockets, we're talking like 50 million, 100 million, I would probably stay away from doing like 200 trades per day, because you can't win that game, not in the live markets. Maybe on the sim. On the sim, everything's easy, right? There's very little slippage. It doesn't matter what the dome is doing and how many contracts are there. If you whack in, 15 lots on NQ, it's still going to fill you because it is sim. But in reality, if you don't have all of those liquidity contracts in and around the current price to actually fill you, you ain't getting a fill in like a million years, because we are retail. We don't have preferential fills. So therefore, if you whack in a trade that is bigger, first of all, you go in the back of the queue. People who are ones and twos, they get to the front of the queue, because obviously it's easier to fill. I trade thin markets, and I have always traded thin markets, so I'm perfectly aware of the pain of trying to execute a 120 lot position in crude oil, when crude oil, even on the best of days, maybe you can hope to have like 15, 16, maybe 20 contracts somewhere, but usually this is what it looks like: 1, 2, 4, maybe 12 every so often. If you come across an area that has about 20, that is usually where you will see some sort of dealer involvement, so that's why it's good to kind of scan through, and you can see that we don't really have anything larger until we get to 111.50, and then further down 11.31. So sub 112, there is some institutional interest here. What about the upside? Let's have a look. So I have 115 as my area of interest. So what was that? Nothing. There was just 10, but a lot of contracts were traded. So there is something around 114.75. One note about crude oil: it does usually like 0.75, 0.25, 0.50 areas. However, in this high of a volatility, I would argue that that's not as relevant, because they're just wagging like $1 like it's nothing. So let's have a look. Even up at 115, at the moment we're only having 18 contracts. However, 115.30 has someone with fairly deep pockets who are just sitting there like my little chameleon over there with 142 contracts. So even if we get to 115, they will whack it back up to 115.30 at the very least. Okay? So that basically means I shouldn't even be looking for reversal setups until we get to 115.30, because that's what they are. And they will get a fill, because that's where liquidity is, right? So that's where they go. Who are they? The wizards. Dealers, market makers, they have a lot of cash to spend on their activities. So yeah. Oh, it's Mo Avery. Okay, thank you. Thank you for clarifying that. That's much easier to read. Thank you. Mo Avery. I'll try to remember that. Zero Float says, we did not trade CL when it was a 100-tick range for years because there was no volatility, and now we're not trading because there is volatility. Well, maybe you're not trading. I'm trading it. Quite a lot, actually. I wasn't happy with it at a 100-tick range. I'm pretty happy with it now, but I'm just not trading it as a major contract. I'm trading it as a micro. And if it gets going and if it's a more sane reversal rather than a tape bomb, I will scale in up to 5 as well. but I just won't do it on just like one large CL because it's too much risk. So I'm starting it on like 2, maybe 3 if I can somehow get a slightly smaller stop loss. Not too small, because I'm talking like as a general rule right now I'm using 164 ticks for a stop. That kind of matches my initial risk of ballpark about 320, 350 risk per trade. So nothing has changed. I've just kind of changed the as opposed to like risking 30 ticks back in the day on a full CL contract, which was also $300. So again, the risk per trade is not really changing much. It's just how you execute it. But I'm not saying, oh, don't trade it. I'm saying, yes, you can try, just don't trade the large contracts. So please try not to put words in my mouth. I think that I'm pretty clear. I don't think that I'm speaking Chinese here or Serbian, which is even more obscure. It is my mother language. So try not to sit on your ears as I'm like saying things. So I'm saying I am trading it, but I'm trading it through micros. Are we all 100% clear on that? Yes or no? I don't know. Am I not being clear here? Am I saying stay away from crude oil? Do not touch it. No, touch it, but don't touch it on something that can hurt you. Touch it on a 1 micro and 150 tick stop. See how you get on. If you feel uncomfortable, don't touch it. You don't have to touch it, but it's a good product. And it's the same product now, like it was during COVID, like it was during the crisis of 2014, like it was for many, many years. And then we just had an odd 18 months of it just doing nothing. So, yeah. Beijing Snow with a nice comeback. Why is she speaking Chinese? Yeah, exactly. Freeman says, I trade GC in the Asian session. Which volume profiles are best to use? Weekly, daily, Asia, Tokyo, Shanghai, COMEX. So, I've got to say for Asia, I mostly just use options levels. I don't really have a look at like supply, demands, and all of that. I just look at volume profiles, which is similar. As an overall weekly plan, I like to have a look at the visible range volume profile or a 4-week volume profile. Just like overall volume, right? That kind of gives you the same idea as where the supply and demand is. So let's have a look at that. But then from that point on, I will just do the options levels and just use them. Because more often than not, the way Asia does things is to really tag some of these bigger options levels or interesting levels where there's some anomalies. I'm not going to go deep into it, what I consider an anomaly. But this is the reason why I picked these levels. And look at how Asia behaved today. Do you think it's odd that they stopped right around 4,700 and then went all the way down, touched 4,650 and then turned around and went back up to 4,700, overshot, but are not able to stay there? That's not an accident. That's dealer activity. So really, once you start seeing these levels in like anchor points, the Asia development tends to be a little bit easier to grasp. And then apart from that, I will use the TPO profile. I do use Tokyo as a rough orientation point, but more often than not, if I'm awake during Asia, I will actually wait for that first move, which is typically a reversal. Tokyo likes to do head fakes, and then kind of go for the reversion trade opposite to the first half hour of Tokyo, if that makes sense. Now, if I was not able to obtain an entry in and around that area, I will then wait until effectively the lunch hour in Tokyo, when they typically create the high or the low of the session, and then try to run the opposite trade. Recently, I have not been awake during Asia because I have been able to sleep, and now I'm sleeping. So, no more Asia for me for a while. At least I hope. Jason says, I'm 400 profit today. Should I get out or wait how it goes? Honestly, just take your money. 400 is a smashing day, especially during times when people are losing accounts left, right, and center. Take your 400, lock it out, go live your life, man. You've done your job. Remember that we don't get paid for time. We get paid to be right at the right time of day. Doesn't matter whether that's 10 minutes, 5 minutes, 2 hours. But once you have a decent amount of profit for the day, hey, 400. Brilliant. Well done, man. Go get that money and lock it out, save it for the payout, and go do something else. Enjoy your day. Pat yourself on the back. You've done brilliantly. Okay. I know that on Topstep TV we sometimes showcase large payouts. That's mostly for inspiration. I always say that once you drill down into the deeper picture, very few of those people have like a smooth smashing it for 10,000, 50,000, 20,000 every single day. Usually the story is like they've been in a heavy drawdown and then they have one big day. Apart from Korab, who's the only one that I would say actually has really good skills. Maybe even that guy Tyler, but I'm still not sure about that. So yeah, very few people are actual traders with a system behind it, and then they keep banking. Most people are just, well, I had one big day, I have no idea how I did it, but awesome. And then very soon after that, they go on a daily loss limit bonanza, and they typically lose the vast majority of it, sometimes even all of it. And that's the story. So while it is inspirational to hear that somebody made 50 grand on the day, it is also not something that should drive your ambition. Always remember that comparison is a thief of joy. So you do you. 400 is an amazing day. Even for me, it's like, what the hell do I need? I don't go anywhere. Yes, okay, I've got 8 dogs where, a lot of the cash goes. But at the end of the day, it's like I'm pretty happy just to make a few hundred in a day on a prop account. I'm not saying that I don't have other things that make more via our trading efforts on like the mechanical trading side and stuff. But, for prop, 400, one awesome day, right? So keep it as kind of running income that you can put somewhere else eventually that will grow that capital even more. Beach and Snow says burek is amazing. If you don't know what burek is, it's a Serbian pastry delicacy that's made with cheese. And yes, I do agree, burek is truly amazing. Now, if you're wondering why does it sound a bit Turkish, because most of that region, we were basically under Turks for 600 years. So most of my dishes that you see there, sarma, burek, it's all going to be very, very Turkish. And we even call our domestic coffee, we call it Turkish coffee. Even though we literally call it domestic coffee, if I'm going to translate it, word for word. But yeah. How does NASDAQ look for longs? I always say that I'm not an equities trader by trade. I do trade DAX, and I have traded ES and NQ earlier before things went a little crazy with NQ. So I do know them well, but I will say that recently, in the last 4 or 5 years, especially since after 2022, I haven't really done that many trades. So I can tell you my opinion, I can tell you where the levels are, but I am not the one to tell you how the statistics are playing out over the last 3 months, 6 months, a year in NQ nor ES. I'm still not big on trading it. I think I did one M&Q trade the other day though, so full disclaimer. And that was an NFP day, so wasn't a big day because it was a short time. I only had half an hour to do it, so I did skimmed about $230 to the short side, and that was it. So keep that in mind, okay? Let's have a look at the anchored levels. I just need to scroll all the way to my dark corners of the platform that I use for charting to find NQ. There it is. Okay, hello. And because I have to do levels on NQ for our Discord utility server that gives anchor points and average daily range, average session range, and a whole bunch of other stuff, I do have to look at it. Alright, so we do have a kind of a weaker call wall at 24,250. Now, apart from that, nothing really that would be super strong for me to get involved. There's an average session range low exhaustion at 24,200, so we're just trying to turn around. One thing I can say is that it is a neutral day at the moment. Not looking bad for longs, but again, pinch of salt, right? Because I'm not really an equities trader. One little caveat is that the closer we get to the New York Stock Exchange Open, we are currently sitting underneath the value from yesterday, from the main session, right? So we're sitting just underneath it. The value low on my charts, the way I like to do it, is 24,265 and 3/4. And until we kind of battle over that, I would be really careful with longs, especially if all of these bad news keep hitting the wires, because that is very bearish for equities. So I wouldn't be, personally, I would not be long right now, even though it is a neutral day for London, even though we are hitting average session range low for London, but we are under VWAP. There was a fair amount of volume that happened, so there could be a reversion trade, but if another headline hits, and if it's still bad, it won't matter, right? So nothing is going to matter. And then the next level that I have down is 24,000, nice round number, where quite a lot of protected puts are sitting. So it's a moderate put area, not to be sniffed at. And on the upside, we do have a call area at 24,500. So those are kind of two wedged levels that I would be maybe looking for setups, rather than this middle of the swing nowhere. Even Asia low is much lower down. So we have Asia low down at 24,150 ballpark. Yeah, I am not really in favor for longs. We also have a low volume node, much closer to the 24,000 area. Maybe a little scalp up to VWAP, but very risky, very risky. To me, the way I'm seeing this, we have this area here, that's the Asia low, and very frequently they go to test that before they do anything. You can see that the Tokyo high swipe and a reversal happened with the help of the tape bomb, but now it's kind of middle of nowhere, right? And yet it is a range. So I would wait for better trade locations if it was me. But again, I know nothing about how you trade. I don't know whether you are a scalper or whether you like to hold trades longer. How long do you hold trades? Because I'm looking at this from the perspective of I want to hold it for at least 90 minutes, right? But if you're only holding trades for like 30 seconds or 2 minutes, that's an entirely different story, right? So yeah. It's just my take. Take it with a pinch of salt from a non-equities trader who understands it but doesn't trade it very often. And the reason why I know the stats on my products is because I'm with them every day, right? I know how they play out, why they play out. I run my what I call counting algorithms about once every 2 weeks to make sure that the stats with what we've seen and the trades that I've done are still kind of responding to the larger sample size, or maybe diverging from it. And then that kind of gives me something to fall back on. But yeah, so what did I want to do here? I wanted to put a visible range volume profile and then widen it. But yeah, so if you have a look at the slightly wider area, you will see that the lower volume, we have these single prints here right underneath 24,000 and already a pop into that. Now, do you think it's an accident that we have a large options level at 24,000? Of course not. This is where the lower liquidity lies, and this is reflected in the volume profile as well. So if we ever get down to that area, that might be a decent sort of very nice swing long. But intraday, there is a chance that they swipe the Asia low, and then I would be interested in a mean reversion long that I'm not running all the way to the opposite side of the swing, so no higher day, but instead just taking it in the middle. Maybe point of control if it kind of goes down as the market starts developing a little bit more, but yeah. Let me just put the noise filter on because my husband decided to do some vacuum cleaning or hoovering. Just randomly, right? I have the level 2 data, so that is why you can't see them. It is a paid for add-on, which is not from Topstep, it's actually from CME, so they just kind of pass over the fees. And it is, I believe, around about $34 a month. However, it starts on every first of the month. So if you start now, you will only get like 3 weeks of level 2 data. But in order to see the entire dome and entire depth of market, which is what it's called, why we call it the dome, or dome, however you want to say it, is because all of us pay for the extra depth of market liquidity. So yeah. Vladimir says, pozdrav iz Srbije, Rođo. Pozdrav, brate, kako si? Dobro jutro. And yeah, so did I miss someone? So Magid says, what is a smoother market to trade right now? Honestly, alternative markets. I would look into ags if you are struggling. I'm not struggling, right? I'm actually liking my markets. This is what I live for, right? Markets that move. Even if it's like a big range, as long as it's a bigger range, I'm happy. But yeah, so if you're really struggling, take a look at soybeans, take a look at lean hogs, live cattle, corn. So we have some excellent coaches in those alternative markets. Coach Jack, JD Senior, he's JD's dad. He trades corn. He's an excellent trader. He is an older gentleman, but so much wisdom there. So go into Discord, go to his classes. They're all there. Then you of course you have Coach Hoop. He trades cattle a lot, and he is a specialist in live cattle. So you can go into his markets and ask him questions. So we have coaches for every single market that you can imagine, and everybody serves a purpose to cover the markets that we know the most about. NG, I saw a question about NG. Honestly, NG is a seasonal product for me. I typically only trade it if I see good amount of movement. I'm not seeing that. If you look at NG, which is natural gas, it should be moving, right, with all of the stuff, but it just isn't. It kind of moves very slowly, and then the ranges are obviously a little bit small, so this entire movement is 63 ticks. So if you're looking for something that might be a bit more sensible, look, NG is probably the only market right now where I would actually plop in a full NG1 contract because of the ranges. Ranges are still very, very doable, right? They are ballpark about 120 ticks a day. And that's also because obviously natural gas is much lower in price in general, right? So the 5% movement is not going to be the same as, the same impact of everything's melting. Unlike, 5%, 15% movement in something like silver or gold, which have much higher pricing. So, yeah, so for me, nat gas has not really been the market to trade. I traded it during the winter time and the better part of January and February, but now it's like in that weird period where we kind of don't have enough demand for it. So whenever it goes up, it tends to just kind of start going downwards, but in a very, very kind of crawly, slow way. So I did one natural gas trade the other day, sat in it for 3 hours. I managed to get 8 ticks out of it. So it's like, no. So for me, that's a bit of a mental trigger, right? To sit in something and not actually get at least like 50, 60, 70 ticks out of it. Can I look at ES? So everything is a mirror image of crude oil, right? So yes, I can have a look at ES. Oh my God, are the equities traders now they're all gonna torture me now. D, can you look at RTY? Same situation, right? Interestingly, I plopped this weekly range low. I don't know when, it was so long ago. And we're still above it, right? So did we break into any new levels? I don't think so. I think we're kind of dipped below it and now we're back inside it. Look, if we had like a ceasefire or some sort of a deal, I would be thinking, yeah, we're going back up. With what's happening right now, I'm really, really suspicious of any sort of long continuations, unless something changes through the day. But for now, I ain't seeing that. So this weekly range low that I placed many moons ago, this would probably last year in October. So it's quite funny to me to kind of have a look at this right now and see that it's still there. So it's still there. So that's definitely some kind of a decision point. Let's see how the Tuesday plays out and what they want to do and how. But yeah. Mr. G says NG made new low of the year yesterday. Yeah, listen, it is a bearish bias, but it's too slow for me. Can I say that? This is Granny D over here, who generally likes lower price movement, but I also despise not much movement. It just moves. NG moves in this like really slow day. John is asking me how do you say cheers in Serbian. Nazdravlje? I think it's very similar to Russian in that. Živali. Yeah, that's right. Živali. Some people say nazdravlje, but živali is also probably more. Again, guys, I haven't lived there in over 20 years, right? So when I went back there in 2019 to visit my mom and dad, my dad was still alive, and I couldn't remember how to say half of the things, so I had to keep defaulting to English. Luckily, most of my family speaks English. But yeah, that was a pain. For about like 3 days, like the entire weekend, I was stuck with trying to find words. And then I would say a word that would sort of be missing a letter. So it's like close enough, but not good enough. And then my mom would just burst out laughing because like, well, you sort of got it. But I don't have an accent when I'm talking, so it's kind of bizarre. I'm just saying words that don't exist. And that's just a function of me not actually speaking much Serbian in the last 20 or so years. So it's only natural, right? Things go away even if it's your mother tongue. Hermes says, good afternoon. After yesterday's brief exchange, gradually moving to GC and Q volatile AF right now. Crude correlation winds me up. Yeah, so for most equities traders, crude oil correlation can be super annoying. But for me, I like this. I'm like, yay. So even if you miss, this is what I like about crude. Even if you miss like a move in crude oil, there's another one coming. In equities, I always feel like they're so boring because if you miss a move in equities the way they normally move, you're done. Like you're then looking at either a lot of risk or basing your trending move off no structure. So how do you do that? It's like it does my head in. This is why I don't connect to equities. But crude oil, it wags up and down, you know, and it's great. It's like awesome. Give me more of that. And yet, you know, the reason why NQ annoyed me quite a bit is because it moves up and down in a single 30-minute period. So it's like so undecided on which way it's going to go. And then it just goes, and then you're like, okay. And then the same thing, up and down, up and down, up and down, up and down. So you kind of almost look at it as if it's having a seizure of some sort. It's like, dude, do you want me to call someone? Like, what is happening with you? So that's why, you know, I'm not really in favor of NQ personally. It annoys me from that side of things. But swings that are across 2 hours that then ping all the way down, oh, yes. Love that. All right, so let's have a look at the actual levels that I have on my charts over there. Here it is. So I have 66.25 as a potential weaker call wall, and then similar to NQ, we do have 6600 in the core futures. So I'm not using SPY or SPX. I'm actually using futures for this. They are down at 6600 as a put level. So that would be probably a protective put. If they start to drip all the way down and, you know, we get more escalation, maybe a little bit of a fight, maybe some gamma pinning around there. But if they start to run it down, that could be the sign of the kind of a squeeze to the opposite side, right? So kind of you got a short squeeze, well, this would be a long squeeze, because at that point the dealers have to start hedging with the movement, because at that point their short puts or whatever they have down there, they will start losing money if the market is not dripping down, right? So they have to start selling more. That's usually how that works. But yeah, it's literally the same picture as NQ. To the upside, we have 66.50 as an orientation level, and then really nothing much in between. There's smaller levels, of course, but the mega call wall for today is up at 6,800, so that's very, very far. But yeah, the only levels that I can see around this price is 66.50, 66.25, and then the nice 6,600 number. The gamma wall for puts is all the way down at 6,500, so that would be interesting. That would be semi-apocalypse in the making. Get your bottle caps under the mattress. Alright, let's get back to our copper trades and our metal markets here. What's the time? Okay, we've got half an hour. And that is all good. John Hoagland, good morning, good morning. You're like always here now, John. I'm starting to miss you. It's like, well, I just thought, is John here? is Hogan chat? Raymundo says, oh my god, did NQ traumatize me? Well, probably. NQ traumatizes most people, so don't worry. Hermes says, 100% right, became a caffeine addict sitting at the screen for hours having missed golden opportunities. Out of curiosity, do you adhere to strict work routine hours or you're more fluid? So it really depends on what I'm doing, right? I do run a small community of market stalkers that, require... So I have some people trading London. I have a few people trading the US markets. Every so often I will get somebody from Australia, so they almost uniformly will trade Asia. So yeah, it just depends. But if I do see that I have a pretty long day, I will stick to my times of day for trading, but I will stare at the markets most days. So for the entirety of the day, just to kind of see what's going on. But that does not mean that I will trade outside of my day trading time zones that I've defined because of both stats and the way my products like to move. However, for me, it's one of those things where I have the concept of time of day is a level. So if something is happening outside of that, like for example, the ADR gets reached on copper to the downside earlier than it should, that's great. But if we then stay at that level, so it's a statistical exhaustion of the perceivable range for this time period over the last 10 days, I still won't do anything with it until I know that the proper high probability statistical bounce is coming in copper, which never happens at this time of day. Maybe you get a bit of a mean reversion, but if we're talking ADR exhaustion setup that hits early, that usually drives in the opposite direction only after 9 a.m. Central and into, and sometimes even past, the London close. So me plopping in a trade at ADR on the account of the ADR exhaustion at that time or this time of day would be absolutely pointless and outside of the stats of what that product typically does. Does that make sense? I use data, not feelings. And if you are getting super emotional about a lost trade, I would argue you're probably not using data enough. Time of day for me is absolutely crucial for commodities because they are very... Like a whole bunch of stuff can happen in and around the times of day when I know what happens. But once the time hits, I know what I should be looking for on a day like today. Like, for example, if we, have a day where copper doesn't really do a reversal here into the overlap, then I'm looking at a potential for a single direction day. So any pullback that I see post NY cut after 9 a.m. Central and into the London close, that is now a pullback for a continuation. So it's not always like, oh yeah, we come to London close, we fade everything. It's very contextual. But by the same token, time of day is still a level. It's just whether you're using the pullback to actually run a mean reversion, or are you using a pullback to ride it for continuation. If you can find that sort of a difference, then you've got something, right? That's your situational awareness. And this is why I have the TPO profile, why I have the Asia high-low, why I have the gamma levels on my charts, why I have the ADR ASR frequently on my charts. Didn't do them today because I had to deal with a sick cavalier who's not eating, so I don't know how alive he's gonna be. But yeah, so it's it's a matter of context. So if you can develop situational awareness, you will no longer need to sit and wait for your star setup to happen. You're just basically trying to do the best for the stats at the time of day when those stats have the highest probability of working out. By the same token, if you're looking at exactly the same setup, but it's outside of that time of day, it's not the same setup because the probabilities suck. Like for example, now 50% that copper is going to go into a continuation versus a mean reversion. So why do I pick mean reversions? Because they have a larger excursion, bigger move. The only reason. Otherwise, a coin flip. So from my perspective, my job is to figure out a way how I can get in on the higher MFE, effectively higher excursion, by looking at the levels that we've got in and around here. And if I don't find good levels, that means I shouldn't be in a trade. So from the perspective of watching the markets, I watch them every day, all day. Asia, London, I don't sleep usually. So Asia, London, pre-market, COMEX open, NYMEX open. But do I trade it? I only trade when I know that the probabilities are the highest. However, markets on my life, right? So I will always be looking. And I've done a lot of looking. What's Market Stalkers? That's your brand of business. It's one of my businesses. It's more like the what's happening? We've got some news hitting. We got news. Tape bombs. Let's go. Don't see anything. Alright, let's wait, because I'm seeing a lot of movement. We are getting some tape bombs in MGC. Is that across the board? Is it across the board? No, not quite. So I'm seeing the exhaustion of buyers in copper. So that's a bit weird. It's against what I want to see. No tape bombs in crude oil yet. So was this like a GC thing only? Probably. Yeah, so delta on copper has shot up, so it kind of paired off basically half of the amount and is now flirting with the London session delta at -7. So that could be. But usually I want to see like a good shakeout that has a lot of volume in it. Like a sweep and then a bounce, right? And then slowly they start to turn around and then they get more power to the opposite side. I'm not really seeing that at the moment. And I'm not seeing any news either. Hogue, if you can see anything, let me know. But I'm not seeing anything new since there is one thing that's not marked. US didn't intentionally target Carg Island landing docks. I don't know what that means. So we'll find out together, right? Yeah, so Hermie is asking what's Market Stalkers. So Market Stalkers is something that I started as a kind of a community. So that is my YouTube channel as well. So the reason why I'm called Market Stalker D is because of my style of trading, but also because of Market Stalkers. And it's a few of us. It's not just one person. Originally there was like 6 of us, but I could never get any of my more nerdy colleagues to go in front of a camera. So I ended up doing most of it. But it is several of us. We are not just like a trading thing. So yes, we have a course, but we also do a lot of software development. So we develop tools for various platforms. We provide services for institutions in the banking space as well. So, it's a lot of stuff that we do on that side. And yes, custom indicators and TPO profiles are one of them. So, yeah. Bugs is saying I look amazing today. Well, I feel better, right? So I was able to actually... My hair is a mess, so I don't know what's going on there. Sorry, just going to throw it up. Looked like a cave woman this morning, so this was the option. But I managed to have enough energy to make my really nice kind of makeup, and I spend a good amount of time with that. So hopefully you appreciate that, right? My makeup is eating, as the kids say today. Hair, not so much, but yeah, we'll make it work. Yeah, so that's a tape bomb, beach and snow, yeah. Absolutely. Nasty PA. It's a bit tricky. It is a bit tricky, but again, not impossible. So remember, small size, wide stops, and stay away from the middles. That's the only way not to get stuck in a tape bomb. So why? Is because tape bombs will usually go into these options levels, and then they will do something at them. So if you are getting involved outside of them and you're kind of like in the middle and you're not sure, and then they whack it up to 115 and still sell off, what have you done? You have managed to lose a trade where you were right on direction but your trade location sucked. So try to look, like, zoom out. Don't stare at the 1 minute chart. This is the time to zoom out. Look at a 30 and 4 hour chart. Look at the, somebody said that they started using Mentor Q on my suggestion, and it helped them massively. That's why, that's like your first step. I go a step further where, yes, I use Mentor Q. Yes, I do webinars with them every so often, but they're not necessarily just the only way, because there's too many levels in there, right? So for me, I need anchor points that would be bigger swing reversal points. That's what I need. I don't need every and any GEX level that comes across. And for that, I have a proprietary way of calculating them with a whole bunch of stuff that happens at the strikes. Vincenzo says, did she say some markets are like a woman you can look but can't touch? I said stripper. Not a woman, but strippers, generally. Sorry, this stream is going to take on a bit of a weird tone. So in London, strippers are not to be touched, right? You get these like air dances. So that was my joke. I don't know how much it lands for the US people, because you guys are a bit more crazy over there. But yeah, we're very kind of PG over in London. Anyways, back to the markets, yeah? Yeah, so watch out for trade locations. And the reason why we, Hoag's weekly kickoff levels, my gamma points, they are areas where we expect dealers to do something. Now, it doesn't mean that they're going to touch it and then immediately reverse. In the negative gamma environment, you expect the prices to be sliced through and then to reclaim, yeah? So that is where the power of knowing where the gamma levels are, because you can see where the liquidity is. I did see the other question, how important is the dome for a beginner? Honestly, I would say that some of the best traders who came from the dome reading side, they do better with like scalping in general, because they immediately have an idea of where the big players are. So let's have a look at CL. I have 115 as an end of day gamma wall, and also an important area which kind of weakened through the Asia trade, but it's still there, right? It's still a call wall. It's still like a whole bunch of stuff up over 115 that's happening. Do we have anything on the dome? Oh, look, can you see that? 362. Actually, let's make this bigger for font size. Large. Let's go large. Can you see this? 363 contracts laying, waiting, like a chameleon, waiting for a flight to go by and just go. Mwah. So that's why I have the chameleon. It's an ambush predator that is the most non-threatening ambush predator you can ever imagine. So that's what the dealers are doing here. They have probably an idea to run like a core position somewhere around 115, and that's where they're positioned. So 115 at the moment has 363 large CL contracts. That is size. So now they've gone down to 122. Now there was a bit of a spoof there, if you saw it. If you're trading micros, you still need to have a look at the big contract. The big boys don't play in micros. They don't care, right? Because they have deep pockets. A lot of spoofing going on in and around this area. Then to the downside, where are they? Well, nowhere for now. Where is liquidity? So nothing to the downside. Nothing. Everything is saying that we're going to reach 115 at the very least, and then maybe even higher. Now they've disappeared. Did we touch 115? We touched. Did they trade? Let's see. They traded. Look. 775. It traded out. So somebody is looking at something here. We've got 14 minutes together. What is a gamma wall? It's a level of higher open interests in the options chain that the dealers use to fill their positions and to create transactions that will create a whole bunch of stuff. Now, the dome is basically it's levels that gamma walls are the highest points of interest. So there's going to be a lot of contracts sitting there, basically. It's larger under 115.30. Okay, Mo, so just be careful because that's a fluid environment. So if I saw 115.30 earlier in the session, I'm not seeing them right now, which means that they're not there yet. Or they've spoofed, so they can flash the order and disappear. But the one at 115 traded out. So now what happens? This will be the point to look at Bookmap or look at a lower time frame and wait for the sellers to appear. If they don't appear, it's not time yet, so they will smash it a little bit higher and then just wait until the tape turns red until the conviction to the short side actually starts happening. But this is where I sometimes flip to a low time frame, but I prefer Bookmap for this because I want to see diminishing delta and I want to see sequential larger red, mostly red bubbles. Not all of them because I use total delta for them, but mostly red that kind of starts to drive the price away. As long as the Bookmap is green, it's not time yet. So you're just going to get stuck in a potential, another retest of the 115, maybe even higher. So we just wait. So we're there, but we're waiting. How do I spot delivery from interior to exterior? I'm not quite sure what you mean. Do you mean from passive orders to actually trading out? Well, volume profile, right? So this thing on the dome on the right is volume profile. It tells you how many contracts traded per price, actually traded out. And the dome is just resting orders, and they can spoof. But once they've actually plopped in the order there, that is when you start noticing, because they actually have skin in the game there for whatever reason and whatever they want to do with that level. It's an institutional area that is of interest for them. Does that make sense? So nothing yet on the tape. Delta is just sitting there. They might be absorbing a little bit, but the bubbles are small. I want to see big bubbles, big absorption. For now, they're still green. They're small green, but they're green for nothing. Yeah, so dome will be fluid, but once they trade out, that's what you see on the volume profile on the right here. And, you know, you don't even need to look at the shape of it. You just need to see whether they've actually traded out. You can even look at time and sales or something, but to me it's like cancerous. I can never figure out anything on time and sales. It's just like, yeah, ifs. But Bookmap, when Bookmap came in, that was like a big game changer about 5-6 years ago. Alright, so Troop says there's 150 lot and 115.35. Are you seeing that on the micro? So again, I just said if you're going to be watching, if you're going to be looking at the dome, you need to go large contract, not small. Trade the small, trade micro. But see, I have the dome on Bookmap with like the large one, but I just stay on MCL on my execution platform, which is Topstep X. Sam Cha has joined us. Good morning, good morning. So yeah, and obviously with the dome developments, you also need to take in context. It can't be just, oh yeah, large order, let's go. Sometimes they will use it to run a gamma squeeze, which is entirely possible on a day like this. I just think that with what we have in the options chain, which is like literally levels at every $50 from 115 upwards, it's going to be a little bit difficult to have a smooth movement. Not impossible, of course, because if they pull all of that because the algorithms figure out that something has been said, anything's possible. That's what we say ACH. These are fluid markets that live and breathe, and they have spoofing, even though it's technically illegal, but very difficult to prove in reality. So, yeah. Does it happen to anyone that Topstep X loses scales from some? Yeah, I've had that happen a while back. So, right click on the price and then pin to scale and say pin to right. So usually when it loses scales, that's, I don't know, I've done that myself a few times and I'm like, well, where's my price? Where's my current price? And then I made it a point to to find how to come back on the scale. So you have to click on the candle itself. So right click on the candle, pin to scale, and then pin to right. If you go no scale, then it should disappear. But if you pin to left, there it is. But I don't want that. I just want to pin it to the regular right hand side. Pin to right. Okay. Alright, so no reversal yet on copper from me. So I'm just sitting here and talking to you guys. I am still thinking mean reversion into COMEX initial balance. But yeah, we need something to happen. Gold wicked almost all the way down to 46.50. Almost, but we did touch that. And right now we're kind of creating these higher lows. Copper needs to go into a bigger correlation between gold. Otherwise, no trade for me. Otherwise, we wait. And if it continues to go lower, if we go quite a bit lower and then retest Tokyo low, I may want to use Tokyo low as a continuation pullback. Maybe via some kind of a failed auction like upside auction that fails, and then run a short after 9 a.m. Central, obviously. But yeah. Alright, we got about a few more minutes here, so let's see what copper wants to do. Let me have a look. Some buyer exhaustion. Whoa, why am I shouting? Some buyer exhaustion. See, this new medication affects my throat as well. Like, suddenly I have more projection than I normally do. So sometimes I scare myself. I'm like, whoa, what was that? Yeah, so we had some buyer exhaustion at these levels, but it could mean they're just taking a breather until they breathe and then they go higher. But yeah, we have all the way up to 117. It's like this big wedged area. So if I'm going to say that we're going to get a range, another hypothesis that I might want to take is to wait until we hit 117 and then wait for a pullback and then run along somewhere with this perceivable gamma squeeze that might be happening at the moment. Yeah, I know, just like screamed just out of nowhere. It's like, whoa. Because usually it takes me a lot of strength to get the words out That's how bad it got at one point. So I always felt like I'm like almost shouting, but nothing's coming out. And now my projection is like, it's not always there, but it's sort of there every so often. It's just like, ah! It's like, what happened? Christ. But yeah, it's good times. Let's put it that way. Peace and love for you says thanks to y'all. Me as a good English person saying y'all, but I'm just reading. Thanks to you all for what you do at Topstep. I just joined. What was the sentiment on gold, and how do you see the current trend and time frame? I see no trend. No trend. We're flat. These levels that we've had for the last few days, they're still there. So there is a little bit of a skew and an attempt of breaking out into a phase 2, which is markup if you want to use Wyckoff for analysis, which I do. But let's just have a gander at the daily chart on gold. So there is no trend. To me, this is establishing more like a rally base sort of situation. Undecided. So we've stayed in this area for 3 days. I would be looking at the Asia range as my areas of interest. I've talked about it earlier in the stream. And in this, just trying to see whether you're breaking out of the Asia range or are they just wagging around and messing around it. For now, they're messing around it. They tried to go above the 4,700 mega call wall, failed, then rotated through the majority of the Asia range. You still have the Tokyo low that's standing there at 46.40, just under the weaker call wall, but still an orientation point. So for me, it's sort of just like wedged in this one big range. And I don't want to do anything with gold. But copper, still waiting for the mean reversion because it's in a little bit of a better situation. Because it already wicked below the Tokyo low. The Tokyo was very small. Of course, the danger is that this is now a breakout of copper outside of the Asia range and it keeps going down to 550. If we do get to 550, rather than re-accept the Asia range, I might want to run some longs here as a bigger mean reversion, but for now I'm just seeing a smaller potential for maybe a reversal into COMEX IB. Some orders just went off in crude oil. Let's have a look. Yeah, they're squeezing. So they're squeezing with, so the sweeps are happening with the direction. I would not get in front of this, nor will I try and FOMO into it, worst thing ever. But if it gets up to 117 or somewhere near there, I might have my pre-NYMEX short, which is unfortunately not going to be during this stream. But hey ho, we can't tell the markets when to do stuff. So bigger context, we do have an overnight high at 1116.57 ballpark. That wick of that and maybe a reversal could be a temporary scalp, but my scalp, I wanted to go for 150 ticks in this framework. So yeah. So yeah, let's see what we have. A lot of tape bombs still. You know, will they, won't they? The drama continues. We heard that lovely story during group coaching yesterday, how they pulled out a guy. Did somebody else think that was like Mission Impossible sort of script? Yes, and then we went in for search and rescue, and there was a head, and then it was a human. Like, what are we doing here exactly? Like, I want to know, did they get a script writer to write that? Didn't it seem a bit too scripted? I don't know. Tinfoil hat over here. So yeah. The OP says, so glad to see D is not miserable. Was I miserable before? I really tried not to be. I really tried, but obviously failed. Energized and not just in pain, and really happy new meds are giving you a new fresh. Hey, nobody is happier than me, man. You know, a little bit sad that I missed out on 4.5 years of my life, but hey, it's life. I've learned to slow down. Let's look at it on a super positive view. That made the rescue sound biblical, right? That's what I was thinking. Yeah, they made it sound like it was some biblical story of going to find the new Moses or something. I don't know. But yeah, it was funny. It was quite entertaining. But a bit scripted. A little bit scripted. Some signs of life in this long idea that I have. We still needed to give a proper go at least 590. I mean, I want to be in maybe if I see some commitment to that long side and a reversal. I want to see it eventually go over 560, but I don't want my entry to be 560, so I might need to front run this and just hope that my stop is large enough if they decide to sweep it back down through the low. Anyways, let's make way for the daytime show and the opening call. You saw Hoagland is already awake, so our friend Johnny and Co. are going to be presenting you their views on all of these markets, and you know, we're going to see how many tape bombs we get today. Should we run sweepstakes? That's all I have for now. You will probably not be seeing me today, but you will see me again tomorrow for another episode of the Metal Markets. I'm Market Stalker D. This was the overview for the day. I will see you again very soon. Enjoy the rest of the broadcast. Take care.